Good morning, my friend. We are currently, let's see what we got going on here. Currently thinking of going short on MicroStrategy. Hopefully, you guys can see this time. MicroStrategy has just gone up a little bit, which is interesting. But we're looking for a potential short here. No trades to take right at market open, just because we don't really know how the market is going to react to the new president. I mean, obviously, from a fundamental level, the inauguration is pretty bullish. It's a good thing to kind of have over with, and he's seen as pretty bullish for the market. So overall, pretty bullish news. However, it's really important that we wait to see how the market reacts. You never know when other traders think that we might be overbought or that it's kind of risky being up here, because as you can see, I don't have it drawn out on this chart, but the market is near this level of resistance. We'll see if we get a breakout, but most likely we'll probably get some sellers here. Just depends how bullish the market is feeling about the inauguration. So, bullish news, but we're at a lot of resistance on the daily time frame for the Nasdaq. So, a little difficult of a situation. And when situations are difficult and we don't know exactly which way it's going to go, we just wait to see how everyone's feeling. This is a potential trade idea to the downside on MicroStrategy. But yeah, really gotta watch the market first. See how they're feeling. Overall, at the moment, I'm mostly biased to the downside, just because I think we're potentially a little overbought here, just based on that pattern that I showed you guys on the daily time frame of the Nasdaq. Doesn't mean that we have to sell off from here, but yeah, overall a little biased to the downside. All right, the market's struggling and starting to reverse a bit. Looks like the Nasdaq might want to move lower. A little too soon to tell. We need to see more traders step in. These are mostly just the overnight orders that come through. The first 5 minutes usually doesn't determine the direction of the morning. MicroStrategy and the market are moving together right now, so might be going short. There's the entry. Let's see. I'm a little interested in taking this. It's a little early for me. I mean, we're still only 2 minutes into the market. Yeah, let's see. Oops. Oh no. MicroStrategy is hard to borrow, HTB, which means that they don't have enough shares to short. That's unfortunate. It means that I can't go short on this, and neither can other people, at least who are on Charles Schwab, because MicroStrategy is being shorted by so many people that there are no other shares to borrow to go short. I could explain that in a bit more detail, but you guys can ask me later if you guys care at all. Damn, that is a shame. All right, well, let's go look for another trade then. I am bullish on SMCI to the upside. I don't think we'll be taking this, but if the market wanted to move to the upside, we might get a move here in SMCI. The reason why I like SMCI here is because it has a really good risk to reward. It's just been really consolidated on the daily time frame, so you can get a pretty small entry, and you can see if we even just move to the high of that candle from 2 days ago, we would make more than 5R. So pretty good. Still a little sad about our MicroStrategy trade. All right, we might get a move lower in the market here. Now it looks like the market starting to move to the downside. Expect it to be a bit of a choppy morning potentially, just because we have good news, but we're moving to the downside. All right, there's a potential short in Microsoft here. We have an imbalance of sellers, at least so far. We're moving to the downside. We're beneath $429, which is this important price level. So we could make it down to maybe like 424, somewhere in that area, if the market wants to continue to sell off, which, as you know, all morning I've been pretty bearish, looking to go short. This one's already run a little bit without us. The trade idea would have been something like, once it went short there, would have been like about like that. But yeah, I kind of missed that one, trying to find a short position. Sucks when you miss the entry on a trend like this, because then there's no other entry to take. The risk to reward just isn't there. Well, we've been completely right on our short trade idea on the market. So for anyone who just hopped on, I'm going to show you guys why I was looking to go short this morning. So just real quick, we're talking about how the news is pretty bullish. Having a new president, that's usually pretty bullish. Making the switch to the new president, that's typically like historically seen as something that is good for the stock market. And then also people tend to view Trump as bullish for the market. So anyway, overall, we've had good news. However, we're right at this price level of sellers here on the daily time frame. And typically, not always, but typically, when you're in a pattern, actually, let me draw that back out. When you're in a pattern kind of like this, you tend to complete the pattern. Normally you would do this before breaking out, or at least you'd break out here. Normally you don't break out all the way up where we currently are. Sometimes you do if it's really, really bullish, but normally you complete the pattern. So since we're in this pattern, I was looking to go short this morning, and that's why we came up with our MicroStrategy short trade here that we were not able to enter, because apparently so many other people were going short, and why we're looking for some other short positions. It's kind of like that Microsoft one. Wow, SMCI. The only thing that's moving up like this right now. All right, well, I'm going to check over on your guys' messages just because it might be a few minutes before I see any other trades, just since we're already in the sell-off. The reason why I know that is because I can't really just jump in a trend that's already so oversold, just because there's less room to make to the downside, or less money to make. And then if we do go for a reversal, it'd probably take at least 10 minutes for us to get some candles to print that would allow us some confirmation that we're going to move back to the upside. So most likely there aren't any trades to take for the next 10 minutes. Oh, there it is. There she is. Yeah, dropped. What is that, like $16? Dang. Oh, that's a pretty nice paycheck right there. By the way, I don't recommend sulking over your missed trades. I'm just messing around. I really don't care so much. We do this every day. I've been doing this for a long time, but it is just funny to see sometimes. It's a little lame, but not a problem at all. On our SMCI trade idea, working beautifully. Yeah, not seeing any good setups right now. Just the way it is sometimes. I wasn't as confident in SMCI, so I'm not too upset about this one. We might have entered this trade, but overall, it was not following the market, which I prefer. Prefer when we trade in the same direction as the market. If we have enough room to the downside to get a good risk to reward. Let's remove this one. The risk to reward on this isn't that great. That's a pretty big move just to make it to 3R, so we're not really seeing it there. If we got some more consolidation and a move lower from after that, like if we got the high of another candle right here and then broke to the downside, then we could use that as a smaller stop loss, and then we could get a really good risk to reward. But this one right here, as you can see from the daily time frame, yeah, we're probably gonna make money and move in that direction. However, we'd probably only make like maybe 1 or 2 R, maybe 3. It's just not the best risk to reward. We might wait for a potential reversal to the upside instead. Remember, the market tends to move based on where the best trades are. So if there isn't that much room to the downside, or if it seems unlikely, then the market usually doesn't continue in that direction because there aren't enough traders who take that trade and agree with it. That's why my number one goal as a trader and to teach you guys is to sit on your hands and just wait for the perfect trades. Oh my God. Remember how we were talking about the risk to reward on SMCI? This is what I was talking about. 3 weeks ago, we had a similar trade idea like this on SMCI and it moved 15 times in our direction. Today, this one little trade idea moved 10 times in our direction. So right up here, this is 10R. So that means if you had risked, let's just say $500, this one single trade of just holding on to it before it started to reverse, we probably would have sold around here. But point being, you could make somewhere between like 3,500 and like, I mean, we wouldn't sell at the top like that, but just for fun, about $5,000. So SMCI tends to have a really good risk to reward. And the reason why we know that is because we use the daily time frame as a reference. If we didn't use the daily time frame, we never would have noticed that this could have made it to the high of that previous candle, right around, was this 32.80? And instead it went up even higher, right up to about 33.50. So if you're not using the daily time frame, you're never going to see stuff like that. It would just look like a normal 5-minute time frame to you guys, or just a normal candle pattern. Sorry, my throat's pretty dry from still being slightly sick. And then also, if you don't use the daily time frame, you'd be wondering why price is moving up so high, and a lot of people would start trying to short it really early. This is why we use the daily time frame. Market is now very undecided. We're still in this range where we have support at the bottom, resistance up at the top. The question is whether we think that we're going to move lower and try to close this gap to the downside. The way we would find that out is I would want to see how price reacts at this level. So when we get back down here, I'd want to see price get kind of slow and consolidate and then start to move to the downside. That would be our potential confirmation that we're getting a trend to the downside. However, without that exact movement, I mean, that's where the confirmation is. So if we don't get exactly that, then we don't have enough confirmation. So yeah, there is the potential that we're going to trend to the downside. However, I'm just going to show you guys real quick. This price action right here, this does not equal trending. It's kind of trending. We have a small imbalance of sellers, but overall, this is not what a trend looks like. There are 3 market conditions. I'm also making a video on this just to simplify this for everyone. There's dead market conditions, there's trending, and there is choppy. So trending tends to be just a consistent imbalance of one side. So just sellers or just buyers, which obviously we've had a lot of buyers stepping in here with this candle and this candle. So currently we are in these choppy market conditions where the market is currently undecided. We're getting a lot of arguing right here. So when market conditions are choppy like this, usually you can't get the best breakout trades because what will happen is you'll get a breakout and then the buyers will step in and then run it back up. So you're just significantly less likely to have a winning trade when you go for breakouts in these conditions. You know, it's pretty straightforward. The sellers try to move it lower and then it doesn't push lower because too many sellers get nervous. So then price hangs and then we break back out to the upside. So then the buyers step back in and then your stop loss gets hit. So breakouts are not the best trade idea for these choppy market conditions. We need it to trend to the downside with an imbalance. That's when we get to enter with a smaller stop loss because there are fewer buyers, and then we get a better reward and we get a bigger trend. But right now, based on market conditions, not really seeing that. Also, you have to remember the market is we currently have good news. This is pretty bullish news. That's why we're up in the morning. Trump's inauguration is seen as fairly bullish. So overall, there could be a lot of buyers down here. So just not the best trade idea. Don't get me wrong. We could definitely go short here like we were considering. However, like why would we bother risking our money and lowering our standards to taking a breakout in choppy market conditions to the downside while there's bullish news? Like, why would we even risk it for a probably like only a 2R trade? Why bother risking it when we literally see better trades than that all the time? I mean, 10 minutes ago when market opened, or maybe, sorry, a half hour ago when market opened, we were looking to go short on MicroStrategy because of a lot of good reasons. It was overbought. I thought the market would sell off in the morning. Immediately moves 5R in our direction. That trade was significantly better than this trade idea. So it's like, why lower our standards and take a mediocre trade just to trade? Because that would just be gambling. And yeah, I mean, we also saw the one on SMCI, which was very clean, very obvious imbalance of buyers, very clean breakout to the upside because we had this candle print right here and this other candle print. So we had this clean breakout, and yeah, that one was decent. Probably wouldn't have taken that one, but you get the idea. But yes, this is starting to look like we're trending to the downside. Just be aware that we'd have to use a large stop loss like this, and that the risk to reward is going to be all right. Probably not that great. We could probably maybe make it to 3R. But with all this choppiness, you are going to have to expect that we might get a breakout and then it might just reverse. Or we get that breakout, it reverses a little bit, maybe hits your stop loss and then moves lower. So you really have to watch out for these conditions. There are buyers stepping in again. Too hard to say where the market wants to go, whether it wants to move back to the upside to market open or sell off from here. Yeah, no problem at all. Sorry for the rant. Sometimes I just have a lot to say. I've been trading for too many years. All right, Tesla is considering breaking out to the downside just like the market. Pretty risky trade though. All right, we talked about this on Tesla, or maybe it was on the market, how once we start to get this small consolidation, we might be able to use a smaller stop loss and go for a breakout to the downside, which gets us a little bit better of a risk to reward. I'd want to see the market moving to the downside from here, and right now is just not doing that. I think we're going to leave this chart here on Tesla. Tesla is the best one that I can see to the downside and even as a potential reversal to the upside. So yeah, we're going to leave it here while the market consolidates. But let me know if you guys have any questions, just because yeah, we're honestly on the hunt for trades more than we need to be today. Just checking the volume to make sure that this isn't dying off, because we don't want to be trading alone. We definitely need other traders here with us. If the volume had died off and if there are no other traders, then we're not going to be able to, or we're going to be less likely to have the momentum to get to our profit target. But it looks like volume is just fine, so we're looking good. Market's still thinking about moving to the downside. We're starting to get a breakout. Let's see in this trade. All All right, I'm going short here on Tesla as we're getting a breakout on the market and because we're able to use a smaller stop loss. Sorry the entry on that one was so quick and abrupt. It just so happened to be that the market just broke out to the downside pretty hard. It's hard to say if Tesla is going to want to follow or if the market is going to continue to the downside, but so far this trade idea is looking pretty decent. We got a small stop loss, market's breaking down. Sadly, Tesla's not following it as much, which has me a little concerned because it seems like volume's a little low. But here's the breakout on the NASDAQ. Little concerning that Tesla is not moving. It seems like sellers might be wearing a little thin here. That's the problem with Tesla, is Tesla is one of the few stocks that don't follow the market properly. It's really odd. I've never really found out why Tesla doesn't follow the market, but yeah, sometimes it does this. And then sometimes it does follow the market. It's a very interesting one. We might have to reduce our position on this just because it's not following the market properly. Just in case, let me get ready for that. Remember, we like to go heavy into trades that are working and light on trades that are not working. And so far, this is not working out immediately like we would have expected because the market is working out immediately. So a little concerning, especially if the market starts to move to the upside. We might have to reduce this position. I'm going to stay in this trade, but I don't like what we're seeing here since we're not getting confirmation. I guarantee a lot of other stocks are selling off with the market here, but not Tesla. Looks like our concerns were a little correct in that this might be dead market conditions where traders have been stepping out. We shall see. Get a better look at this. We'll also probably move our stop loss down here soon if we get another low. Tesla not following the market. Not a big fan of these slow trades either. We take breakout trades expecting to see momentum, which is exactly what we saw in the market. So that's why I'm not liking what we're seeing here in Tesla. I expect breakout trades to work almost immediately with minimal resistance, which is exactly what we saw on the breakout in the market. So sometimes this happens, not my favorite, but overall it is holding up all right. Looks like we might have to, okay, we're gonna reduce this position here and then we'll add back in if we get a breakout to the downside. Well, we're gonna reduce this just because it's not moving the way that we want. It's looking like Tesla is in more of a kind of dead market conditions here. Move the stop loss down a bit there. All right, so overall we're risking maybe like 0.3 R because we sold out on 60% of our position right near break even. So this is about a third of our position and we reduced our stop loss. So we're risking maybe about 1/3 of a normal risk. We're still going to stay in this in case the market wants to sell off. But yeah, this was to be expected. Let me pull up the market to show you guys. As we were talking about, in choppy market conditions, you can expect that when you get a breakout, you either get a big pullback and then a move lower, or you get just a reversal to the upside from here. So these breakouts to the downside during choppy market conditions, not the highest win rate trade and just not the best risk to reward. But yeah, the market was setting up pretty decently. So We'll definitely go over this trade. We'll journal this trade out loud a little bit later. But overall, I'm not really seeing this as like a bad trade. I imagine that we'll probably feel pretty decent about having taken this trade. Remember, there are good trades that lose money sometimes, and there are bad trades that make money. So we'll think about that one a little later. Big reversal in the market here. Yeah, it looks like we're going to get stopped out on a very small loss. I'm glad we took off 60% of our position when things weren't moving our way. This is a perfect example of why we add money into our winning trades that treat us well, and we take money off the table in trades that are not treating us well. Think of the market, think of your relationship with the market just like a relationship with anyone in your life, with a family member, with a girlfriend, with anyone. If somebody treats you terribly all the time, you don't invest more of your time and effort into them. You pull away, right? We don't invest into things that don't do what we want and that don't treat us well. So the stock market is the same thing. If the market is not acting the way that we would like, we back off. If the market is doing exactly what we want, then we add into the position. That's how we have large winners and very tiny losses like this one. Okay, now we're seeing if the market wants to reverse from here. If this is a fake out, which is a fake breakout, we're not sure yet, but it looks like it might be. It's hard to write on this wobbly thing. All right, yeah, this might be a fake breakout. We're waiting to see if it's fake or if we move back to the downside. Choppy market conditions. Not surprising that buyers stepped in and ran it back up. Although that was a very nice breakout. If the market moves lower and these sellers get rejected to the downside, we can potentially add back into our trade and see if we can get that trend to the downside. We would also make our stop loss smaller so that we're not risking very much. But yeah, right now it looks like the market is reversing to the upside. I'd say Palantir and MicroStrategy would be our best bet. Microsoft still looks short to the downside at the moment. If I were to go for a reversal trade, it would probably be here in MicroStrategy. But not really my favorite trade, and the market is just so choppy that it would have just not the best win rate, not the best probability. All right, so if it's okay with you guys, I think I'm just going to do the trade recap because I'm not seeing any trades I'm really fond of right now. Actually, I'm going to start with the market to show you guys. I like to start with the market for the bias. So it all started with how the market is currently in this downtrend where we have seen sellers at this level. And typically when we are in a pattern like this, we tend to complete the pattern first before breaking out because that is the safest thing to do as a trader. As a trader, we can get a significantly safer entry with a better risk to reward by waiting. The market has been very choppy lately, so I was expecting a reversal back into this pattern. So that's where the original trade idea came from. Next, Trump's inauguration. I mean, we've known this was coming for like 3 months now. It's not really news. So it's not like we should just be breaking out from here and just making like these huge runs to the upside. We can, it's possible. Sometimes that happens, but I just didn't want to go to the upside. So that was the original trade idea. We were looking to go short because of what I just described. So I started looking for a stock that I thought might be particularly weak. That is when I saw that MicroStrategy was up right here perfectly at the open at the close from the previous day. So we were at this beautiful level of resistance on a large time frame. You see me talk about the daily time frame all the time. We were at this nice price level, and even better, we had this nice little consolidation in the pre-market. That way we know exactly when to take our trade. We take the trade on the breakout. So we set our entry right at the breakout right here. And then we want two things. We want two forms of confirmation. It's basically the same. We'll just say one. The confirmation is that when we get the breakout, I want to see a lot of sellers. I want to see them step in. I want to see other traders taking the same trade idea that I have. I want to see them agree with me. And right when we got the breakout, more sellers stepped in. That does not mean that it's just going to go down from there, but it just adds to my trade idea that other traders agree with me. So that was the entry. And the other confirmation is that the same thing was happening on the market. So at market open, we were also watching the market for confirmation. And what did we get? We got a ton of sellers on this breakout. A lot of sellers. So that's when I decided, okay, I like this trade. I think we're overbought. We have a good risk to reward based on the daily time frame, because we could, as I said, literally at market open, we could get a gap fill back down to 370 or at least like the 380. So anyway, just it had enough of what I was looking for me to think that I would take this trade 100 times. Sometimes we'll be wrong, sometimes we'll be right. But after 100 trades of taking this trade idea, most likely we're going to be fairly profitable. The probability seemed good. Risk to reward was there. So that was it. So we took the trade. We then want to trail our stop loss. Preferably, we want to wait for support to be found like this so that we can move our stop loss right beneath or right on the other side of support. I'll just go ahead and tell you guys how we probably would have traded this. We want to wait for resistance before we take anything off the table. So we probably would have sold maybe half of our position here. We would have closed one half. And then it's best to wait for support. So hopefully, if we were doing things correctly, we would have waited for this support to be found and then put our stop loss right above it. And then most likely we would have closed the rest of the position down here at about 7R. So half of the position would have made about 5R. The other half would have made about 7, which would give us a total of about 6R in profit. That is the trade idea. That's the rough strategy of the execution. The other ones are going to be much quicker, so I'll just run through these. The SMCI trade idea. This was our bullish backup. So in other words, if the market wanted to be bullish, I was going to buy SMCI. The reason why is because the risk to reward on it looked really good. We're right here at this important price level. We were starting to break out right above it. We had already tested the highs there, so the fact that we're still moving to the upside is good. And then we could have made it to about here. That's where I was expecting that we'd have a good probability, is right to about 5R. So the risk to reward was there. Overall, SMCI is oversold on the daily time frame. So I was just looking to go long on SMCI in case the market wanted to move back to the upside. And then lastly and sadly was our trade in Tesla. There's a few things that I like about this, maybe one or two things I don't like. So what I do like, we had somewhat of a trend. These were kind of like the Tesla market conditions, and I'll show you that one in a second. We also had an imbalance of seller. All right. And then the last one, we had a breakout on the market. So we were in agreement with the market. All right, so here is the trend. We saw only sellers. This was all sellers. We made no new highs. There's literally, here's the high, highs, no new highs at all. So we had a very good imbalance of sellers. We had a trend, and then we had this breakout with the market that was very strong that gave a lot of confirmation. So overall, this had a lot of confirmation. I would say that most of the time this would have continued to sell off. But here's the one thing that I'll say there are two things I didn't like. One was that I don't even know if this one counts. I'll give this one a partial credit. But one is that we are getting a little slow, starting to kind of die off a little bit. Dead market conditions slightly. I mean, the volume was still there. Sometimes trends like this are very slow. So this one, you can kind of ignore this, but that was part of it. We were a little concerned ahead of time. And then number two is that the market was choppy. Market equals choppy. And lo and behold, after the market broke out to the downside, like we thought it would, it started to reverse. So we've got some good confirmation. We had a little bit of negative confirmation. All in all, let me see if I think that this was a good trade or if I should work on something. Okay, we bought the breakout on the daily time frame right here. Probably could have made it to about here. So the risk to reward was there as well. I'm going to put that as another positive. It seemed to have the risk to reward that we were looking for. All in all, I'm going to give this trade honestly, I do like this trade still. I think it was pretty good. Give it maybe even like a 7.5 out of 10, which is not too bad. That's actually pretty decent. Maybe 7, hard to tell. So overall, I don't think that this was a bad trade idea. I think we did pretty well here. And then I also want to say that I'm happy that we started to take 60% of our risk off of the table when we got in the trade and then saw that it wasn't following the market. That was a really good move on our end. And then we lowered our stop loss shortly thereafter on the remainder of our position. So overall, I think this was a pretty good trade, and I think we executed it flawlessly, to be honest. I think that was pretty good. I'm not just saying that. Sometimes I'm hard on myself, but overall, I think that was actually pretty decent now that we look back at it. And so you can see that as you follow these habits of being very picky about market conditions, very picky about when you take a trade and when you don't, you saw that we had a potential 6R win in MicroStrategy that we tried to take. You see, obviously, we were probably not going to take that SMCI trade, but just as a reference, sometimes we do have trade ideas and trades that end up being like a 10R winner. And then when we have our losses, sometimes we have the full loss of -1R, and sometimes we go in light and have a small loss. And sometimes we do this where we pull out a little bit and we look to re-add. So in other words, worst case scenario, let's say that we risk $500. Let's just say, or we'll make it easy. Let's just say on average, we risk $100. So as you can see, just from having watched my trades over the last month, when we lose, or I probably should just put like loss, our losses are anywhere from typically, let's just say in this case, like $50 to $100. But then our wins, as you either try to add into them or hold on to them, your wins on average will probably be 3 to 5R. So wins might be like $300 to $500. And so the win rate, the risk to reward is there, right? We have the risk to reward is good, and we know that it's always going to be good because of the way we trade. We close our trades at 1 loss or 1R, so that's our max loss. And we tend to only take trades that we believe will make it to 3R or 5R, depending whether you're a beginner or not. So our risk to reward is basically guaranteed, right? So now, after that, we know how to enter our trades. We know how much to risk. We know how to trail our stop loss. We know what we look for in our trades. And that means that we've basically removed all variables from trading. The only thing that we have left to do is just make sure that we only take the best trades that we're confident in, that have the best looking risk to reward, and that have the most confirmation. So that's our only job as traders. Our only job is to stay aware of market conditions and our own emotional tilt. You don't want to be anxious when you're taking trades because most likely you're probably over trading, and you don't want to be overly upset or you might cause some problems. We could go into detail, but I'm sure you guys get it. You've probably had experiences with that. So yeah, I am a little sad that just luck of the draw that we just happened to have a small loss on Tesla. A little disappointing, and that we weren't able to go short on MicroStrategy. So overall, a little disappointing, but that's just the luck of the draw. Just like flipping a coin. There's no way to be perfect, but we can certainly try. Ooh, sound. Let's check on sound. Ooh, wow, really nice reversal. That was a nice fake out. Sound is so crazy. Moves so randomly sometimes. Well, I mean, it is above this nice breakout of $15, so kind of hard to short this. Right now, there's no confirmation to the downside. All we're seeing right now is just a trend, so I wouldn't want to fight that. Everything above this level is a buy, and right now it's currently trying to gap fill probably up to about here, which is right in this area. Obviously we could reverse from here, but yeah, I don't know. I'm not seeing confirmation. The market's really choppy. Currently all we're seeing is buyers, and it does still have some potential room to run to the upside. So overall, I'm not looking to go short on this. If we were going to go short, I'll show you what that looks like. A short idea would be if we made it up to here and then consolidated a little bit and then broke out to the downside. That would give us, at least that would give us like a little bit better risk to reward down to maybe like in this area. Maybe we could get away with like 2 to 3R, and at least we'd have confirmation, and then we'd be even more overbought. And then lastly, another thing that would be good is if at the same time the market started to reverse to the downside. So that would be a better trade. Right now I'm not seeing that. We have no confirmation, bad risk to reward, and the market is not moving to the downside. So don't get me wrong, this could reverse from here. I'm just not seeing the things that I would like to see to start fighting the market. I'm not a big fan of fighting trends. It can be quite difficult. Like I actually just made a video about that last night that I posted on Instagram. You guys probably didn't see it because it was educational, so therefore boring and doesn't get that many views. But I talk about how I don't like to short or like fight trends because there are more buyers on the sidelines than you think. You go short and then maybe they step in right here. So maybe it pulls back and then it goes up. Or maybe it comes back down to here, goes down, and then it goes back up. So there's typically less money to be made to the downside than you expect because you never know when buyers are going to step in. And it's just not a fun feeling fighting the market because you're always on edge. When are buyers going to step in? Are they about to step in? Should I close my position? You don't want to be in that feeling. It's much easier when you're buying with the trend because then you're like, oh, I don't have to do anything. Price is moving in my direction. All I have to do is just keep raising my stop loss. Easy. Feels 1,000 times better. And that's what's going to help you mentally with your psychology. And it's going to help your profit and loss. Your risk to reward is going to be better. You're going to be trading with the trend. I mean, it's just so much better. But yeah, I mean, I'm sure that other guy is probably looking to go short. Honestly, he might be looking to go short on sound. He does like trading sound. What time is it? 9. Yeah, funny enough, not surprisingly, he went short. Sometimes he like calls out his day trades. Looks like he went short on sound at right about here. Yeah. Oh god, it says he added to his short, so he was already in it. God, this is literally what I'm talking about. Like, I don't know how this guy's traded for 10 years and he sucks so bad. It's crazy. So he already went short here, right? He shorted, and then he added to his short up here. This is making me annoyed, to be honest. Dumb trade. So right now, that means his total risk has been at least a little smaller than that. He's risked at least this much. So here's his risk. So that means if this moved in his direction, what? He's gonna break even? Like what? You hold on to this huge loss, and your best case scenario is you're gonna break even? Dumb. So dumb. And look, best case scenario, let's say he made it down to here, that would be 1R. So let's just analyze this trade that this other guy's currently in. He originally, when he entered this trade, he has been planning on holding it to at least here because he's not closed his trade. In fact, he has added to it. So that means that his original stop loss is somewhere, who knows? Maybe God knows, somewhere way up here. So that means had he made this giant move to the downside, he would have made 1R. And not only would he only make 1R, but he jumped in without confirmation. He has now added to his loss, so now he's still fighting the market. Now he's at a bigger loss. And when you fight the market like that, you have a pretty shitty win rate. When you're not waiting for confirmation, when you're fighting the market, very, very upsetting, very disappointing. I think this guy needs to join my program. I think that this guy's been trading for 10 years should probably join the program because that's just embarrassing. We might reverse somewhere around here. It's possible. But so just so you guys know, look at the difference between his trade versus like our potential trade. So here's like his 1R. Here's his potential stop loss. Who knows where it is? Let's just say it is stop loss versus our trade idea, which would be waiting for the consolidation and then the confirmation. So if price were going to move down to here like he expected or down to here, if it moved down to here, he would make, let's put him in yellow. This would be roughly maybe like a 1R win for him. And then this would maybe be 2 or 3R because he added to his loss. Versus us, this down here would be probably like 5R. Unlikely that we would hold it down to here. It'd have to move in a straight line. But just for reference, this would be like 10R. So our risk to reward is probably about 4 times better than his, and our win rate is also probably about twice as good. Because win rate, we wait for confirmation, which puts us maybe like 60 to 70% win rate, and he likes to fight the market constantly, every single day, which puts him, honestly, based on what I've seen, maybe like a 40% win rate. The only reason why it's not lower is because sometimes he adds to those winners, and sometimes they eventually go in his direction and he gets like a break even or a small win. But, sometimes they don't reverse and they don't go in his direction, and he closes on a really big loss and then doesn't mention it to anybody. I mean, people see it in the live trading that he closes on these large losses, but he certainly doesn't mention it in the Discord, and he certainly doesn't do recaps on his trades like we do. Whatever. It's whatever. What do you mean by oversold and overbought? Oh, yeah, good question. We went over this briefly on Friday, I think it was. Okay, so the reason why I was saying that this looked a little like overbought, if you will, a few things. And I'll talk more on this in the new videos that I'm currently scripting. That's actually what I'm going to do once I get off here. I'm going to go back to writing the rest of the course just because you guys have had some really good questions, and so I want to answer them in video format where they're as simple and clear as possible. All right, so this being oversold. One is because the market is choppy. So because we're in these choppy market conditions where the trading strategy that you want to follow during choppy market conditions is reversals. Because remember, buyers and sellers are undecided. So when things get really oversold, then they tend to run back up because then the buyers step in. And then when things are overbought, sellers step in and we run it back down. So typically we go for reversals in these choppy market conditions, which is the NASDAQ right now, was a little choppy. So that's one piece. Two is, yes, this has made a very large move to the downside. So we have sold off a lot. So there's been just price is low. Don't really worry about price. Price is pretty irrelevant, but I don't know how else to say this other than we're just very low, And then another thing, number 3 down here, is that on the daily time frame, we have now closed the gap very beautifully. We came down, we closed the gap, and once we close that gap, that means now we might have the potential to run back up, and that's what we're now seeing. Close the gap. Now that gap is no longer there to be filled, now we can start moving to the upside. The market likes to do that a lot. You have good news, but oh no, there's a gap beneath you. I'd feel a lot safer if we wait for the gap to be closed and then we can buy. You saw that in my recent Instagram video where I was talking about not fighting the market, and it was something about why I wasn't looking to go short on the market. We were waiting on the sidelines to buy and go long. Same exact thing. Wait for the gap to close on good news and then look for the reversal back to the upside. So that was kind of the trade idea on this. That comes with experience. A little bit of this is just experience. So you got to just keep just watching the market, sitting on your hands, just get that experience. Just keep trading with me and I'll keep explaining these same kind of setups that we keep seeing. Hopefully that'll sink in. I think that's about it. And then the last thing about this is that there were a few buyers. We could see buyers here. It wasn't completely dead to the downside like that. There were a few buyers on the sidelines. We saw them step in right here, and then we started seeing them again right here. So that means that maybe there are buyers on the sidelines to move it back up. Damn, look at that trade. Shame. Guess I should have followed my intuition and taken a couple more trades today, but honestly, some of these just didn't meet the standard. Last reminder for everyone. I gotta stretch these legs. Last reminder, I am going to be in Hawaii starting February 2nd, I believe. So I'm going to be in Hawaii for the full month. So I'm going to be doing the live trading 2 hours later. So 2 hours into market open. I'll probably be getting on right around this time just for February. So my apologies on that again. Obviously, I want to keep doing the live trading with you guys, but I will not be there at market open just because market open in Hawaii, I would have to get up at like 3:50 at night. So if I did that, which I could, I'd have to go to bed really early and I wouldn't be able to hang out with my family at nighttime. So I want to be able to hang out with my sister and with my fiance. So instead, I'm going to wake up at about 6 Hawaii time, which is going to be about 20 minutes earlier than right now. So I'll probably get on maybe around 6. Sorry, what is that in Eastern? Probably get on around 11 a.m. Eastern Standard Time, somewhere around there. And then we'll do the same thing. It'll all be the same, but 11 a.m. The market's just totally dead right now. So anyway, see you guys. See you tomorrow.